Take a look at that shilling, now trading at 88 to the dollar. What is your take on what's driving that depreciation there?
Well, in my opinion, it is good old-fashioned inflation. Of course, the less valuable your currency is, it will reflect not just in commodity prices, but in foreign currencies as well. So, and of course, the inflation expectations can be reflected in the interest rate that has been, that from various government paper auctions, and for me, I think it's a stone cold case. Inflation, I can't think of anything else.
What is your outlook longer term in terms of where the shilling is expected to trade in the next coming weeks? We've got expectations just for next week of around 87.50 to 88. It is now sitting on the upper end of that target.
That's an interesting question. Let me give a medium-term to long-term outlook, and I'm expecting the shilling to depreciate further. Simply because the government looks to be spending more and more, and I know, or rather, I think that raising interest rates will not cut it for the bank. So they may have to come in and increase the liquidity just to keep the interest rates down, so that the government may have financing to finance its expenditures. Now, I think I'm listening closely to what the central bank officials are saying, and the latest quotes from the central bank governor have been more about he thinks that, or rather, he's arguing that inflation. The increase in credit is not by inflation. For me, that means that that shows that he's still got a mindset on loosening money supply. We saw he reduced the CRR, even though the market forced him to raise the central bank rate. But the bias is still as at now to seek for cheaper government financing, and in the event that taxation will not yield as much as they hoped for it to yield, as in the last fiscal year, 2010-2011, then there's every likelihood that they may have to loosen money supply so that government can get financing at a lower cost for expenditures.
Given all these factors at the moment, how would you be aligning your portfolio at this stage, and what is your position specifically on banks in this interest rate environment?
Well, banks have an interesting picture. Well, it depends on their competencies. On one hand, on the positive side, they can invest in higher interest rate earning securities, and I know that the interest rate spread should grow faster, because the interest rate on the lending side should grow fast. Will be growing faster, but because they are rich with the liquidity, they don't need to raise lending rates. So in that regard, both from the spreads of between interest rate, borrowing and lending rates, and at the same time from reinvestment income, of reinvestment of current proceeds, then they should be positive movement. We could also see the same dynamic for forex trading. They should earn more from that business, but the valuations of bonds should see some impairments with higher interest rates. We will also see a bit more in transactionary fees. So, like I said earlier, it really depends on their core competencies and how well they can compensate for dipping values in their bond portfolios.
Now, another stock I'd like to pick up on is Mumia Sugar. It recently came out saying it's expecting to increase output by 6% to 250,000 tons this year. Renaissance Capital bullish on that stock in this food inflationary environment, given the ability of the Mumias to pass on price increases to consumers, and the fact that it has a large market share. At 7.6 shillings, it is down 1.3% today. What is your stance on this counter?
Medium term, I'm bullish on that stock. Not necessarily because, of course, there's always a threat from COMESA safeguards being I mean the COMESA agreement whittling down the safeguards for the company, and that remains a risk. However, I take a look at the energy market, and I'm convinced that sugar prices should hold steady, simply because of the ethanol factor, and that should allow any competition from Mumias within the region to perhaps be, I mean, because of the high pricing, that competition probably will not be felt in Kenya because of parity. I believe that the world market sugar prices right now favor Mumias sugar. And then on the other hand, we could argue that the market has probably discounted Mumias sugar too much, given that the risk I was talking about. So if you look at the expected full year results, we expect that to when the results come through, perhaps sometime in August, we expect that to boost demand for the stock, and perhaps we'll be looking at a price of north of 9 shillings, which for me is good because that's at least 30% gain in value.